In this video, Ed Yardeni shares an optimistic outlook on the American economy despite current market volatility and uncertainties, particularly due to new tariffs. Yardeni forecasts slower growth in the first half of the year, but anticipates a rebound in the latter half, asserting that despite short-term uncertainties affecting earnings forecasts, the inherent strength of the economy and the corporate profitability could alleviate these concerns in the long run.
Underlying it all is resilience. Look, we just had 3 years where it was widely anticipated that we'd have a recession because the Fed raised interest rates significantly, and yet the economy remained resilient through all of that. And I think we have to learn from that experience that perhaps the economy is going to remain resilient. I think some of the weakness that we saw in the indicators for January had to be weather related. It was the coldest January since 1988. And so, yeah, I do think retail sales are going to snap back. I think employment could be big, up more than the consensus expects, maybe 200,000. Obviously, much will depend on how much of the Doge boys' layoffs in the government are going to start showing up in the February data. I think most of it's going to show up in the March data. But all in all, I think the economy is, in fact, going to demonstrate its resilience, but I think more of it's going to be showing up in the second half of the year than the first half. The first half, we just got a lot of volatility around all the uncertainties unleashed by Trump 2.0.
What about tariffs as they start to play out? I mean, just as an example, autos, right? Kelley Blue Book says the tariffs could raise the U.S. average price of a car by $3,000. It's already $49,000. The price of some full-size pickup trucks could shoot up by $10,000. What about the demand impact of tariffs here?
Well, I think we have a fluid situation as the administration just characterized the Canada-Mexico tariffs. We'll see. We still have a day before the tariffs go up to 25% on Canada and Mexico, and I'm sure there's a lot of negotiations going on. Mexico's already come back and said that they will slap the same tariffs on China as the United States is slapping on China. So we may find that the whole situation looks somewhat different tomorrow. But I think a lot of these tariffs are not retaliatory so much as reciprocal. The idea is to raise tariffs, mostly to match tariffs of our trading partners and then negotiate them down. So I think at the end of the day, when this all settles out, there'll be a lot of negotiations that actually lead to lower tariffs by our trading partners rather than a retaliatory situation as we had in the early 1930s with Smoot-Hawley.
But I do wonder what that does for earnings, right, for companies that either have to absorb it or pass it along, what it does for their spending plans as they try to figure out the new cost structure and try to figure out where the tariffs are going to hit next.
Well, it's not good if these tariffs obviously are permanent and persistent rather than transitory. It kind of reminds me of the discussion we had way back when on whether inflation was transitory.
Yeah, don't use that word. That's like a jinx word, transitory.
Sorry about that. But I think you're right. I think in the short term here, it creates a lot of uncertainty about earnings, and we are seeing analysts lowering their earnings for the first quarter. So they're obviously reading the newspapers, reading the headlines, watching you guys, and recognizing that right now, the way tariffs are going, it's not good for the economy. It's not good for earnings. We did, I would point out, have record earnings in the fourth quarter, and they were up 14% on a year-over-year basis. Analysts at first thought they'd be up 8%, again showing the underlying surprising strength of the economy and the ability of companies to increase earnings. And I think that's going to continue to be an offset to some of these other concerns. In other words, we tend to pay a lot of attention to what's going on in Washington, and Washington matters, but we often forget to recognize how well the economy does despite Washington. And that's kind of the thesis I have, is that the economy is going to prove to be resilient, notwithstanding Washington.
All right, Ed. Thank you for joining us with that dose of optimism today on another down market day. Ed Yardeni.